Hi everyone, I'm Julie Moon, Senior Research Analyst with Finovate. Are banks and credit unions really prepared for the next wave of growth in financial services? Well, in today's video, you'll learn from Chase Nienken, CRO and co-founder of Chimney, about the biggest shifts shaping bank and credit union strategy, what will separate the winners from the laggards in the next 3 to 5 years, and why traditional cross-sell approaches may not be enough any longer. So Chase, thank you so much for joining us today.
Yeah, of course. Thanks for having us.
Yeah, so let's dive into the questions here. First, tell us about what are some of the biggest shifts that you're seeing in how banks and credit unions approach growth, and what's driving those changes?
Yeah, absolutely. So when we think about growth specifically within financial services, there's a lot that's being driven by data. There's a lot that's being driven through innovation with AI and automation. But I think one of the key things that we always like to position is think about what's happening outside of the industry and the ecosystem with regards to fintech. So the companies that are being rewarded are the companies that continue to invest in efficiency, the ones that continue to invest in convenience, that are really giving those consumers something that's easy for them to understand, it's easy for them to access. And so the comparison set isn't necessarily the bank or the credit union down the road. It's not even necessarily the new fintech that has the right technology and data. It's really the Amazons and the Netflixes of the world that have started to take those consumer expectations and really meet them in an incredible way, where now you can get a package the next day, you can get any show that you want overnight, on demand. And so those are really starting to be the expectations that we see people coming into our banking apps with, coming into the branch with. And so those are really a lot of the, pieces of the puzzle that banks and credit unions need to continue to monitor, which of course is a big challenge when you think about the technology budgets that a lot of these large companies have.
Definitely, yeah, especially with smaller financial institutions.
That's exactly right.
Yeah. So looking ahead, what do you see will separate the winners from the laggards in the next 3 to 5 years in financial services?
Yeah, it's a great question. So the winners and the losers, I think one of the things that you've been seeing traditionally, and especially over the last 5 to 10 years in our space, is that you have a lot of banks and credit unions that are trying to make up that digital engagement by investing in the application layer, right? So that's their online banking tools. Those are the specific tools and technologies and widgets that they provide to their account holders.
Yeah.
But I think over the next few years, what you're going to see, especially with AI and automation and some of the intelligence tools that are coming out, is that the winners are going to separate themselves by moving from the application layer to the infrastructure layer. So owning that data and being able and prepared to take advantage and act on it. So how do you take advantage of all the account holder data that you have within your existing systems, not relying on third parties to do that, and then analyze that data, act on that data, and give that into the account holders in a very convenient experience that helps your teams be more efficient and helps you grow the balance sheet in a meaningful way.
Yeah, and as we all know, that data is so valuable, so that is a key piece.
Absolutely, and especially with where you see the technology heading, right? We don't know exactly what's coming in regards to the world of innovation and AI specifically, but we do know things like analysis is a key piece of the puzzle, right? It's an incredible use case. We do have insight into some of the use cases that are continuing to come around, and synthesizing data and being able to act on that in a meaningful way is only going to get better. When we think about AI, it's as dumb as it's ever going to be. It's as slow as it's ever going to be. So the opportunity to continue to grow is really dependent upon the data set that you feed.
Yeah, that's such an interesting way to look at it. So why has the traditional siloed approach to cross-sell and loan growth fallen short, and what new strategies do you see are working?
Yeah, so traditionally, the way that you would actually service an account holder was a little bit different than what you do today, right? Someone might walk into the branch, they might meet with an RM, you'd have them meet with a loan officer, then as that loan got filed, you'd have someone else process the loan, and then you'd have a servicing team come in or offload servicing. And so it worked because that was the way that those traditional silos processed applications and loans. But today it's a little bit different. When you think about the digital branch, the digital storefront, again, going back to consumer expectations, those siloed approaches are just adding time. And time is money, right? Time is convenience, and time creates blockers. Time means that people aren't as likely to fill out that next application. It means that you're going to lose out on that cross-sell. A lot of the real estate lending applications that come in, I think over 60% of them on average, are usually off working hours, right?
Oh,
So
wow. Yeah.
outside the hours of 9 to 5, they're going online, they're doing it after work, they're doing it when they're home with their loved ones. And so that siloed approach of not being able to service those people means that you're missing out on those opportunities.
Yeah, yeah, that's a good point. Yeah. So, how can financial institutions better leverage property and member data to unlock growth opportunities across lending, marketing, and across digital channels?
Yeah, so this is one that we're incredibly passionate about on the Chimney side, obviously. For us, what we've seen is that real estate data is traditionally very siloed,
Yeah.
and it's reliant on a lot of different third-party sources, but it only comes to the conversation after someone has submitted an application. So if you think about where credit data was about 10, 15 years ago, it was operating in silos and it existed in the bureaus, but banks and credit unions didn't have access to
Yeah.
it the way that they do today.
Yeah.
And real estate data has really followed that same trajectory. When you look at what you need from real estate data and property data to really do an effective job, you need access to the county records office, you need access to home valuations, and you need tools to do that. You need access to credit files, which you're already getting. But the gaps in the credit file exist on the property records, but you're typically only getting those after someone submitted an application and you're doing the underwriting. What we've done is pulled all that information forward. So now anyone at the bank or the credit union can get access to what we believe are basic questions like who owns a home? What is
Yeah.
the value of that property? How much equity do they have? If they have a competitive loan, who's it with? What rate are they paying? When is the term up? All of that information across every team distributed downstream to every system. So lending decisions and leads can happen in the blink of an eye.
Yeah. Yeah, yeah, and that is so valuable too, since all that real estate data varies state by state. So having that served up in a platform like that is huge.
Yeah, and going back to the siloed question, what we see with real estate data specifically is that loans are coming from the lending team, the loan officers, the mortgage sales officers, but then you've also got the marketing team that's responsible for running campaigns.
Yeah.
Then you've also got the digital team that's responsible for delivering offers within the app. And so all of these silos are operating with their own data set, with their own KPIs. And so we built the opportunity to allow them to access the same real-time property data that they can use across campaigns, across teams, across systems
Yeah.
in real time to generate loans.
Yeah, very cool. So to summarize everything or to wrap things up here, what are the key aspects of building a successful fintech?
Yeah, so the big opportunity that we've been able to take advantage of at Chimney is thinking about building a fintech in a strategic way that's designed for responsible growth and making sure that you're delivering for your customers. So we've built our business to about 150 clients today. I think we might be just north of 160, and it's exclusively within financial services. And so what we've been able to do is put our reputation on the line, and every client that we have is referenceable.
Yeah.
Every client that we have, we put our best foot forward and make sure we really understand their strategic initiatives, their key objectives, what their board level objectives are. We build those relationships, and from a company building perspective, the team is absolutely crucial.
Yeah.
So getting the right people around you so you can make sure that when you're talking with your clients, and it's an extension of the brand that you want to put forward. So building a fintech is fun,
Yeah.
building a fintech is rewarding, but there are a lot of key underlying infrastructure things that you need to make sure that you do right so your clients get the best experience, so then they'll make sure that they are referenceable and tell other people about that experience.
Yeah, yeah, and it all comes back to the client for sure. Very good. Well, we covered a lot of ground today.
Yeah.
Chase, thank you so much for your time. This was
Absolutely,
great.
thanks for having me.
Yeah, and thank you so much for joining us.